Good evening,
Trader.
traders.
How
How are you doing? Sure you had a great weekend
has been
and how's
trading
been trading. I hope it's been
profitable?
profitable. I
Wish
wish you a happy new month and I
pray that
pray that this month
more
will be more
profitable
profitable than the
of
month of
October.
October.
Doesn't
Doesn't
matter
matter what
last
last
month's
month's
performance.
performance was.
I
I
believe
believe
this
this month would be
better
better than
last
last
month.
month. Don't be discouraged if you
Ended the
ended the
month.
month last month in negative. Okay,
You
you
should
should be hopeful
that
that
this
this month will be
more
more
profit.
profitable. Okay, and this week would
Yeah,
be an interesting week because
the
the US election is on Tuesday, which is on 5th
of
of
November.
November. So we should expect
The
a volatile market. The market will be very volatile this week. Price action will be very
trade
erratic, and I would
advice
advise that you
should be
should be conservative this week. You should
considered
trade less this week.
so that
Ensure that every trade you execute,
you know
you
the
know
risk
the risk involved and you apply
of risk
proper risk and money management. Ensure you apply
was
stop loss on every trade you
you
execute. If possible,
could
you could
avoid
avoid trading on Tuesday.
it.
Okay,
You
you
could have
could avoid trading on
Tuesday
Tuesday. But if you insist on trading,
please
please ensure you apply proper
risk
risk and money management. So I want us to look at the
fundamentals
fundamentals. Let's look at the calendar to know the
major news
major news that will be released this week
before.
before we go technical.
So
So on
Monday
Monday, there is no major news. So we shouldn't expect much volatility
on
on
Monday,
Monday.
Tuesday
Tuesday
also
also, which is the election day,
uh,
um,
there is
there
no
is
major.
no major. Okay, Tuesday we have several major news.
We have
We have
several
several major news.
4:30
4:30 a.m. Nigerian time,
Australian
Australian dollar cash rates
news will be
news will be
released.
released.
Australian
Australian dollar monetary policy statement and also
rate
rate
statement.
statement will be released by 4:30 a.m.
Nigerian
Nigerian time and by 4 p.m.
ISM.
ISM services PMI will be released.
What
And
is
what
their
is the expectation? The
previous
previous
data?
data was
9.
54.9 and the forecast is 53.4.
So they
So
are
they are expecting a decrease, okay,
for
for
ISM.
ISM services PMI.
I
Like I
said,
said, the presidential election is on Tuesday, okay?
then
Then
Congress
congressional election also on Tuesday, and
the
it will be
whole
all day, okay? Then
uh,
New Zealand dollar
employment change.
employment change will be released by
10
10:45 p.m.
yeah,
Nigerian time.
means
Employment change and unemployment
rate
rate will be released by
10:45
10:45 p.m. And what is the forecast?
2.4
0.4%. The
just
previous
as
was
0.4
0.4%, and the forecast is negative. So they're expecting a decrease, a
negative
negative outcome. That is their expectation. Then
unemployment
unemployment rate, the previous was
4
4.6%,
and
and the
forecast
forecast is 5.0%. So
if the
if the actual is higher than the forecast,
that will
that
be
will be
negative
negative for
New
New
Zealand
Zealand dollar. And if the actual is
higher than
higher than the forecast,
that will
that will
be
be
positive
positive
for
for
New
New
Zealand.
Zealand dollar.
Okay,
Okay,
unemployment.
unemployment rate.
Then
Then on Wednesday, there are no
major
major news.
on
Then on
Thursday,
Thursday, that is
November,
November 7th,
we have
we have
several
several major news
from
from Great
Britain,
Britain,
monetary
monetary
policy,
policy reports,
monetary
monetary
policy,
policy summary, MPC official bank rate votes,
and
and we have the official bank rate. Then
also
also on
Thursday,
Thursday,
unemployment,
unemployment claims,
federal
federal funds
rate,
rate, and FOMC statements
and
and
press
press conference. will be released on Thursday. Okay,
So
so we should expect high
volatile
volatility on Thursday for USD pairs and GBP pairs.
and on
Then on
Friday
Friday,
that will
that
be
will
for
be for Canadian dollar.
payment
Employment change and
payment
unemployment rate data will be released on
Friday
Friday
for
for CAD dollar. So we should expect
high
high
volatility
volatility on CAD pairs on
Friday
Friday, USD and GBP pairs. That should be on
on Thursday.
Thursday. Okay, like I said,
Would
you could
avoid
avoid trading on Tuesday, which is the United
legislative
States
presidential
presidential
election.
election day, and on
Thursday
Wednesday
are
there
no
are no
major
major news, so
there
there
might not
might not be much volatility in the market
on
on
Wednesday.
Wednesday. Then on Thursday, you
Should
should consider trading GBP pairs and also USD pairs. Okay, so
that's my
that's my
take
take
on
on
that's
fundamentals. So let's go technical.
let's go
So let's go
technical.
technicals.
I focus
I
a lot
specialize on, for
on
those
you
of you are to
to
to this
and now
channel. My name is Maxwell Emmanuel. I'm a Forex trader. Been
being
trading
for
for over a decade. And
the
I'm the
founder
founder of
of the
Trade with
Maxwell
Max Forex Academy, an academy that was established to educate and keep
system
existing and new traders with the right information required
in
to trade
Forex.
Forex profitably.
This is
If
your
this is your
first time
first time, I would appreciate you
subscribe
subscribe to the channel, give the
video
video a thumbs up,
so that
so that
anytime
anytime I drop a
video
video or anytime I come on live, I do come on live 2 to 3 times
in a
in a
week,
week. So that anytime I come on live, you get notified by YouTube.
so
Okay, so
please
please
subscribe to the
subscribe to the
channel
channel and also give this video a thumbs up. So let's go straight to business.
So I'll
So
start
I'll
by
start
looking
by looking at GBPUSD. I
at
specialize on
the
USD pairs, and my most preferred pairs
uh,
are
GBPUSD,
GBPUSD,
Australian
Australian
dollar,
dollar, USD, and Euro
and
Australian dollar.
this
It is only when I don't have a good
setup.
setup,
Don't
I
see a
don't see a clear setup on this pairs, that I
trade.
trade other USD pairs. And I
Also,
also trade GBPJPY.
I
Okay,
also
I
trade
also trade GBPJPY, but I
dollar,
specialize on
the
the
major
major
currency.
currency pairs, the 7 major currency pairs. Okay,
So
so let's start with GBPUSD.
in
As
the
you know,
month,
the month just ended, and it's very important that
look
we
at the
look at the
pattern
pattern that
formed
formed last month. Okay,
very
it's very important.
at the
After
close
the
of
close of the monthly candle, you need
to
to
check the
check the
monthly
monthly charts to know how
the
the
candle
candle closed
for
for
last month.
last month. The
Pattern on the
pattern on
month
the monthly time frame, you
should know.
should know. It's very important.
Doesn't
Doesn't
matter if
matter
you're
if you're a scalper, if you trade lower time frame, you should
you
know the
pattern
pattern or the trend on the monthly time frame, because that would also determine the
trade
trades you
take
take on the
lower.
lower time frame. So let's start with the monthly time frame. So
Can
what
I
can I see on the
monthly
monthly
time frame
time frame? As you can see, last month was
strongly
strongly
bear?
bearish.
Can you
Can
see
you
that?
see that?
Last
Last
month
month was strongly
bearish.
bearish.
GBPUSD
GBPUSD did over
how many
how many
pips?
pips?
Five
539 pips.
500 and
539 pips. So if
that
you
is
had executed a sell trade at the
open
open or at the beginning of last
month
month,
would
you
have
would have
made
made over 539
500.
pips on GBPUSD.
Now, how
Now,
much
how
would that
much would that convert to in dollar will be
determine
determined by the
volume
volume or the
of the
lot size you apply on the trade.
so
So
let's say
let's say you applied 1.0 lot size, which is a standard lot.
one
One
pip
pip
of
of
one
1.0
gives
gives
you
you $10.
$10
$10, one pip. So if you had
one
applied 1.0
on
on
GBP
GBPUSD, you
have
would have
made
made
5,000
$5,000 last month,
trading with
trading
this
with a one
standard.
standard lot.
If you had
If you had
used
used
0.1
0.1 lot size,
a
which is a
minute,
mini lot size,
you
you
have
would have
made
made
500.
530 something USD.
And if
And
you
if
had
you
a
had applied a
micro
micro
lot,
lot, one micro lot, which is 0.01 lot size,
you
you
would
would
have made
have made close to
53.
53 point something dollars.
So
So
the
the volume of
currency
currencies purchased or the lot size applied will
determine
determine
how
how
much you
much
make.
you make in
And
dollars. And it's very important to know that
the lot
the
size
lot
you have
size you apply on
a
a
trade
trade is also
determine
determined by your capital.
it.
Okay,
It's
it's
also
also determined by your
so
capital. So last month, as you can see on GBPUSD, was
strongly
strongly bearish. So
from
what should be our expectation this
new.
new month? Okay,
So
so after the close of last month's candle,
strongly
strongly
bearish.
bearish.
Now the
Now, the
next
next thing we should
look at
look out for is the pattern that formed
on the
on the next lower time frame,
which is
which is the
the
weekly
time.
time frame. Now,
After the
after the close of last month's candle, if we go down to the
next lower
next lower time frame, which is the weekly time frame, and we are able to identify a
this is
bullish reversal pattern on the
weekly
weekly time frame, then we
market
might consider going bullish
on
on
GBP.
GBPUSD.
If you
If
go
we
by
go by the monthly pattern, how last month's candle closed,
you
we
should be
should be considering going bearish.
okay, we
Okay, we
should be
should be considering going
bearish.
bearish. But before this pattern
Or the
or the
trend
trend on the higher time frame plays out,
there's a
there's a
possibility
possibility for price to pull back
on
on
the
the lower time frame. It could be the weekly time frame, it could be the daily time frame.
that is why
That is
we
why we are going to switch to lower time frame. That is why it's important to go down to lower time frames to
identify the
identify the patterns on those lower time frame. So if, for example, on the monthly we are seeing a
pattern.
sell pattern, if we go down to weekly time frame and we
Able
are
to
able to
identify
identify a bullish reversal pattern, there is a high probability that the
pattern
pattern
of the
or the
trend
trend on the lower time frame will
play
play
out.
out before the trend on the higher time frame would play out.
So we
So
might
we
want
might
to
want to take advantage of the
pull back
pullback on the lower
time.
time frame.
Okay?
Okay,
So
so
let's
let's go down
want
to weekly and see how last week candle closed.
so
So
week
last week
candle
candle was
strongly
strongly bearish,
right.
right? This was last week candle.
Like
Looks
an
like an indecision. We can't say it's a we
can't say
can't say the bears dominated the market or had the upper hand last week. This
and
is an indecision candle called a
timing.
spinning bottom.
This is
This is
called
called a
timing
spinning bottom, which
indicator
indicates change in trend
from
from
bearish.
bearish to bullish.
Okay?
Okay, when you see this pattern,
It
it
indicates
indicates that
the
the
trend is
trend is about to change, or is
likely going
likely going to change from
bearish.
bearish to bullish. So last week candle closed as a spinning bottom. Now, this
This
spinning bottom is a bearish bottom, is a
bearish
bearish spinning bottom.
reason being
Reason
that
being that the body of the candle
is
is
bearish.
bearish.
So
So
this is
this is a bearish
spinning
spinning bottom. And with this, we can't just jump in and start
time.
buying.
It's
It
not
is not confirmed yet that we have more
buyer.
buyers in the market.
It's
It
not
is not confirmed yet that we
have more
have more traders who are
willing to
willing to buy GBP USD. So going
buy
by weekly
and
candlestick pattern, we can't
then
just jump in and start
buy.
buying.
Okay, so
Okay,
if
so
we're
if we are to go by the weekly time
going,
frame, we
that's
would
the
have
way
to wait for this coming week candle to
close.
close
But
before we execute a buy trade.
this week
This week candle should
close
close bullish. That will be a confirmation
there
that
are
there are buyers or there are
buyers
traders who are willing to buy. We cannot be buying when what we're seeing on the chart or
when we
when we
see that
see that the
candles are
candles that are printing on the chart are
bearish,
bearish candles. We
can't buy.
can't buy.
For us
For
to
us to
buy,
buy, we need to ensure that bullish candles are printed. We need to ensure that there are bullish candles on the chart before we go bullish. Okay, so on the weekly, if we just focus on the weekly time frame, we're supposed to wait for this new week candle to close bullish for us to buy next week. Okay, so since last week candle closed as an indecision candle or spinning bottom, what do? We go down to lower time frame. Okay, we go down to lower time frame. Now, before we switch down to lower time frame, I want us to look at the monthly time frame. What can we see on the monthly time frame? What can we see? What can we identify on the monthly time frame? Before we go down to daily. Now, on the monthly time frame, we had a demand zone here, or you call it your support zone. You can see we had a support zone. Okay, this was a resistance turn support, and also we had a resistance here, which became a support. Okay, so this is what a support zone, or you call it your demand zone. So what happened last month? Price tested this support area, and there is a little rejection from that area, from that zone. Can you see that? There's a rejection from that zone. And when we went back, because the candlestick pattern that forms after the demand zone or support zone is filled, or the demand zone is tested, will determine if price will pull back from that demand zone or support zone. Okay, it is likely price will pull back from that zone. So if a bullish reversal pattern forms at a demand area or a support zone, you should be considering going bullish on that pair. Are you with me? You don't just jump in and start buying because price tested a demand zone, or a demand zone got filled, or a fair value gap got filled. You need to wait for a bullish reversal pattern to form inside that zone before you go bullish. I hope you're getting me. So price tested this demand zone, and there was a strong rejection from that area, and we went down to weekly. And what candlestick pattern are we able to identify on the weekly? It's a bullish reversal pattern, spinning bottom. Can you see that? Also on the weekly time frame, what can we see on the weekly time frame? You can see on the weekly time frame a fair value gap was created. Can you see this? A fair value gap was created. Can you see that? And this pullback could be to fill this fair value gap, this bearish move. Can you see that? And this gap has been filled. Can you see that? And after the gap got filled, what candlestick pattern formed? A bullish reversal pattern. So there is a high probability that price is likely going to pull back from this zone. If we also apply our Fibonacci tool from this swing low, this most recent swing low, to this swing high, you can see that price is at a discount area. Can you see that? Price is at a discount area. So at a discount area, a fair value gap got filled. Also, we're able to identify a demand zone. Price tested that demand zone on the monthly time frame, right? And on the weekly time frame, price filled a fair value gap, and currently price is at what? A discount area. And at discount area, you should be going bullish. Discount means it is cheap. It is cheap. So when the price of a product is low, when the price is low or when it is cheap, demand increases. Okay, so when discount is given on a product, what happens? demand for that product increases. Okay, so price at a discount, a bullish reversal pattern has formed. So this week, I am considering going bullish on GU. That's my bias for GU this week. Okay, that's my bias for GU this week. I'm considering going bullish on GU. Now let's go down to 4 hour. Like I said, we can't just buy GU if we're going by the weekly candlestick pattern. We need to wait for this week candle to close bullish before we buy. Okay. So what do we do in this case? Let's go down to daily and see the pattern that we have on the daily time frame. So you can see on the daily time frame. Let me delete the Fibonacci. So okay, so let's go down to daily. So what do we have here on the daily time frame? You can see on the daily time frame, the fair value gap on a daily time frame. This is the fair value gap. You can see this is the fair value gap on the daily time frame. And this gap was filled. You can see it got filled, and last Friday candle closed as an inverted hammer, which indicates change in trend from bearish to bullish. Okay. Inverted hammer indicates change in trend from bearish to bullish. So the question now is, should we buy from the current market price? Should we buy from the current market price? Okay. Personally, I wouldn't jump in and start buying. Okay, like I said on Monday, there are no major news, so there might not be much volatility on Monday. Also, now a lot of retail traders would have executed buy, right? After the formation of this inverted hammer, the impatient traders would have executed trade on Friday to buy GBPUSD. And where would they have their stop losses? Their stop losses is residing at this previous low. Some will say their stop losses are this low, the low of this inverted hammer, or the low of this bearish candle, or few pips below the low of this candle. And their stop losses could be liquidity. Okay, their stop losses could be used as liquidity. So there is a high probability they might want to clear all the stop losses residing at this previous low before going bullish. Okay, so what's my plan on GBPUSD? Now, after the formation of this inverted hammer, I'm sure a resistance level was created on 4-hour time frame. I'm sure a resistance level was created on 4-hour time frame. So before I go bullish on GBPUSD, I want to ensure that price breaks this resistance. This is 4-hour resistance. Let's go down to 1 hour. So on 1 hour, this is the resistance on 1 hour. So what I have here is a resistance zone. Okay, this is a resistance zone, or you call it a supply zone. Okay, so I want to ensure that price breaks this resistance zone before going bullish on GBPUSD. Okay, I want to ensure that price breaks this resistance zone before going bullish on Australian dollar USD. So it's either price breaks this resistance zone or price pulls back to fill. You can see a fair value gap was created here on a 1-hour time frame. So it's either price breaks this resistance zone for me to buy, or price pulls back. So this fair value gap, price fills this fair value gap before I would go bullish on GBPUSD. I would prefer to buy from this zone. That is, I would wait for price to fill this zone before going bullish, because if I buy from this zone, the risk will be too high. So let's assume the candle that closes above this zone closes at this price, and I decide to buy. This would be the best price for stop loss. The low of this candle will be the best price to use as SL. And you can see the difference is 140 pips. So if I buy from this price, my stop loss will be 140 pips. And for me, that risk is too high. It is too high. Okay, so I'll prefer that price pulls back to this area, because if I wait for price to pull back to this area, let's assume the candle that closes above this fair value gap closes at this price, my stop loss, probably I'll set it a few pips below this low. I want to ensure that my stop loss does not exceed 50 pips. Okay, so my stop loss will be 10 pips below the low of this candle. So I would expect that price fills this fair value gap before going bullish on GBPUSD. Okay, now it's also possible for price to break this fair value gap. That is, a candle could close below this fair value gap. So if let's say 4-hour candle or 1-hour candle closes below this fair value gap, there's a high probability they will come for the lows. The stop loss is residing at these lows. Okay, so it's likely they will come for these lows. That is if a 4-hour candle, a 1-hour candle breaks out from this fair value gap. So if they're able to break out from this fair value gap, patiently wait for liquidity to be cleared, and also wait for a bullish reversal pattern to form on 4-hour time frame before you go bullish on GBPUSD. That's my take on GBPUSD. Let's move to the next pair. We've spent so much time on GBPUSD. If you have any question, please drop it in the comments section. Okay, I don't have a secret strategy. When I'm analyzing the market, I use all my tools. Okay, what do I use in analysis? I use candlestick pattern. I use the Fibonacci tool to identify discount and premium area, and also I use fair value gaps, okay, to identify possible areas where price is likely going to pull back. Okay, so those are the tools I use for market analysis. Okay, so let's move to the next page. Let's look at Australian dollar USD. What's my take on Australian dollar USD? As you know, Australian dollar USD is positively correlated with GBPUSD. By that I mean 70 to 80% of the time they move in the same direction. So we'll start with the monthly time frame. Okay, so last month also was strongly bearish on Australian dollar USD. As you can see, the pattern we have on Australian dollar USD monthly time frame is similar to what we saw on the GBPUSD chart. Okay, so last month closed strongly bearish. Okay, so after the close of last month's candle, what do we have on the weekly time frame? Let's go down to the weekly time frame. How did last week candle close? Okay, so last week candle strongly bearish. Okay, so strongly bearish on Australian dollar USD last week. Okay, so after the close of last week candle, now on the monthly time frame, we had a fair value gap here. On the monthly time frame, that gap has been filled, and the market is currently trading below that gap, and also a fair value gap was created here on the monthly time frame. Okay, fair value gap was created here, the monthly time frame. So price is currently trading below the fair value gap on the monthly time frame. What I think played out here is that now after this bullish move, you would agree with me, there are a lot of stop losses that was residing at this previous low. And it could be that this bearish move was to come clear the liquidity residing at this previous low. That's what I think played out on the weekly time frame. Okay. This move could be to just clear the stop losses residing at this previous low and also to fill this fair value gap that was created, and that has been achieved. So what is their next move? So let's go down to the daily time frame. After the close of the weekly candle, what pattern do we have on daily time frame? So as you can see on a daily, there are indications that buyers are showing up in the market, but not aggressive yet. The momentum is still very low. Okay, the momentum is still very low. But looking at the pattern we have here, we had a spinning bottom, a bullish spinning bottom, and the next candle closed as an hammer. This is a bullish reversal pattern. This is a bullish reversal pattern. And last Friday closed bearish, and it created a resistance. You can see it created a resistance. So if we are to go bullish on Australian dollar USD this week, this resistance must be broken. That is, a bullish candle should close above this resistance level. My bias for Australian dollar USD this week is bullish based on the pattern on a daily time frame. This is a bullish reversal pattern on a daily time frame. But before going bullish on Australian dollar USD, I want to ensure that this resistance is broken. 4-hour candle should close above this resistance before going bullish on Australian dollar USD. Let's see 4-hour. What do we have on 4-hour? So you can see on 4-hour, before the close of the market last week, price went into a range after forming an engulfing pattern here. Can you see this pattern? This is an engulfing pattern, which indicates change in trend from bearish to bullish. This is an engulfing pattern. Okay, now, after the formation of this engulfing pattern, I think a fair value gap was created on a lower time frame, 1 hour or 15 minutes time frame. After the formation of this engulfing pattern, let's see what we had on 1 hour. I'm sure a fair value gap was created. You can see on 1 hour, you can see fair value gap was created on 1 hour time frame. And what happened after that gap got filled? You can see price had to pull back to fill that fair value gap before going bullish. You can see. And what happened after that gap got filled? What happened here? The fair value gap was created. You can see a fair value gap was created. And what happened before the close of the market last week? Price came back, filled this fair value gap, and there's a probability that price might pull back from this fair value gap. As you can see, the gap has been filled. You can see. So it's likely price is going to pull back from this fair value gap. Okay, you should also note that these lows are areas of liquidity. There are a lot of stop losses residing at this previous low, and they could come for these lows before going bullish. Okay, they could come for these lows before going bullish. So you might want to see price pull back to this zone. So if price pulls back to this zone and a bullish reversal pattern forms, you could go bullish on Australian dollar USD. That will be my approach this new week. Okay, I want to see price pull back, if this fair value gap, or price clears liquidity residing at these lows before going bullish on Australian dollar USD, or buy after price breaks out from this resistance. Okay, but I want to consider the risk involved. Let's assume the candle that closes above this resistance, okay, closes at this price and I decide to buy, my stop loss will be at this low, which is about 53 pips. 53 pips, which is still okay. 53 pips is still okay on Australian dollar USD. And if I'm taking a risk of 53 pips, my TP, first TP will be 75 pips. That will be 1:1.5 risk reward. Okay. So that is what I'm looking out for on Australian dollar USD. Price should pull back, fill this fair value gap, or clear liquidity residing at this previous low before going bullish, or price breaks out from this resistance zone. Okay. So that's what I will be looking out for on Australian dollar USD. So my bias on Australian dollar USD this week is bullish. My bias on Australian dollar USD is bullish. Okay, now if you're new to trading, it's very important that you learn the basics of Forex trading. It's very important. Okay, that you learn the basics. You need to know what leverage is. You need to know what lot size is. You need to know what a pip is. You need to know how to execute trades. It's very important you know the basics. One of the reasons traders don't do well, most traders fail in trading, is that they lack the basic knowledge of Forex trading. Many don't understand leverage. Many don't know the right lot size to apply on a trade. That is why they fail in trading. You need to understand the basics. Okay, very important. You need to understand the basics. Okay, so if you would like to learn the basic and you would also like to learn my unique strategy, I would employ that you enroll for my mentorship program. It is not compulsory. There are a lot of information online, a lot of YouTube videos that you can watch, and you can learn how to trade. You can learn how to trade for free. It's just going to take you a long time to really grasp some of these basic concepts. Okay, and like I said, most of the things you would learn in the mentorship class, you're learning when watching my market analysis videos. I use all the tools. Okay, you can learn from watching my videos consistently. The difference between the mentorship program and the videos that you watch on YouTube is that you would be given access to the Zoom session where your questions will be attended to. Okay, you have access to the Zoom classes, which holds 2 to 3 times in a week. You also have the privilege to send me private messages. That's just the difference between the mentorship program and the free class. Okay, so if you're interested in learning my trading strategy, you also want to learn the basics of Forex, you should enroll for the mentorship program. So if you're interested, you can check the description for more information. Okay, you have my contact there. You can always send me a message. So let's move on. So that's my take on and also I've made my mentorship program is cheap and very affordable. It's very affordable. Okay, I made it cheap so that everyone who is serious about making money in trading can afford. Okay, I want to ensure that you're able to afford the fee. That's why I made it so cheap. Okay. So let's move on that. So that's my take on Australian dollar USD. Let's move to USD CAD. Okay, let's move to USD CAD. So USD CAD is negatively correlated with Australian dollar USD. So if we're considering going bullish on, if I'm considering going bullish on Australian dollar USD, should know my bias for USD Canadian dollar, it will be a sell. Okay, it will be a sell. So let me start with the monthly time frame. So last month, you can see last month was bullish on USD CAD, while Australian dollar USD was strongly bearish. Last month on USD CAD was strongly bullish. That tells you that both pairs are negatively correlated. Okay, so on the monthly time frame, what can we identify on the monthly time frame? First, we can see here on the monthly, a fair value gap was created here. Price filled that gap. Right, yeah, price filled this gap, and there was a strong rejection. Price has tested that area several times. You can see, and there's been strong rejection from that zone. And last month's candle broke out from that zone. Why? Why did last month's candle break out from that zone? It could be that the liquidity residing at this previous high needs to be cleared. That could be the reason for the breakouts. Also, after this breakout, a lot of retail traders would have bought, right? Because last month's candle closed above this resistance area, which indicates that there is more demand for the base currency, which is the dollar. So a lot of retail traders would have jumped in because they would see this as a breakout from resistance. And when there is a breakout from resistance, most retail traders would go bullish. Okay. And like I said, we have stop losses. Those who sold at this point, there are stop losses at this high. Also, those who sold from this point, their stop losses will be at this high or a few pips above this high. And also, most who sold from this point, their stop losses would be this previous high or a few pips above this high. So I think last month, what they did was to clear the liquidity residing at this previous high, but the highs here has not been cleared. So there's a high possibility that they would come for these stop losses before going bearish. So my bias for USD CAD this week would be a sell. It would be a sell. Another reason I'm considering selling USD CAD is that considering where price is at the moment, I think USD CAD is overbought, is overpriced. And there's a possibility for price to pull back. Now, the bearish move might not be a long-term trend, but it could deliver at least 100 pips or 120 pips. Okay, it might not be a long-term trend. Okay, it could just be a short-term or medium-term trend. Okay, but going by the monthly time frame, if the pullback would occur, it is likely going to deliver not less than 100 pips. Okay, so it's be for short term. Now, after the formation of this pattern on the monthly time frame, if you go down to lower time frame, let's see what we had on the weekly time frame. So on the weekly time frame, this is what we have on the weekly time frame. So you can see a fair value gap was created here. So it is expected that price pulls back to fill this fair value gap before going bullish. It is expected that price pulls back to fill this fair value gap before going bullish. Okay, so I want to see USD CAD pull back to this fair value gap before going bullish. I can't buy USD CAD. This would have been the best entry. You can see we had the bullish reversal pattern. You can see it here. We had an hammer and the next candle closed bullish. So this would have been the right time to buy USD CAD. So if I didn't buy USD CAD at this point, why should I buy at this point when the market is trading this is over, that's about 400 pips. The market is trading 400 pips above the price I should have bought USD card. So it will not be a wise investment to buy USD card from the current market price. Price should pull back to a discount area before going bullish. So this coming week, I'm interested in selling USD card. Okay, but as you can see on the weekly time frame, the pattern here is still bullish. The candles I have been printing on the weekly time frame is bullish, bullish, bullish. So we cannot sell until a bearish reversal pattern forms on the weekly or daily or 4-hour time frame. That is when we can go bearish on USD card. If there are no bearish reversal pattern on daily, weekly, or 4-hour, we are not selling. It's not time to sell. Okay, so let's go down to daily. What do we have on the daily? Still bullish. You can see, but at this point, a shooting star candle formed. You can see at this point. And what we saw, price action on Thursday and Friday could be to clear liquidity residing at this previous high, and also the liquidity residing at this previous high. That they have achieved. And this candle looks like an angry man. You can see it looks like an angry man. So if Monday candle closes bearish, then one can consider selling USD card. Okay, one can consider selling USD card if Monday candle closes bearish. If Monday candle closes bearish, one can risk selling USD card. You could also wait for price to break to close below this support. You could also wait for price to close below this support before you go bearish on USD card. So that's my take on USD card this coming week. I would be going bearish on USD card. I hope that is clear. I hope that is clear. So let's look at gold before we end on this week outlook session. Okay, let's look at gold. What is happening on gold? Okay, so let's start with the monthly time frame. So last month was strongly bullish on gold. So strongly bullish on gold. Gold has been bullish for several weeks. It's been bullish for several weeks. Okay, and I think gold is still very bullish. Every sell setup on gold is a pullback. Every sell setup on gold is a pullback. My bias for gold is bullish, but it's very risky buying gold from the current market price. I think gold is overpriced and it's likely going to pull back anytime soon. So I wouldn't advise going bullish on gold. It's very risky. Gold has been bullish all through this year. It's been bullish all through this year. You can see. So this is the first candle for the year, January, you can see. So you can see gold has been bullish since the beginning of this year. And it's still bullish. It's still bullish. So I'm not trading gold at the moment because the risk trading gold at the moment is very high. Okay, it's very high. So if we go by what we have on the weekly, you can see last week candle closed as a doji decision candle. It indicates that the bulls are becoming weaker. Okay, the demand for the base currency or the demand for gold is is decreasing. That's what a doji indicates. Demand for gold is decreasing. The buyers are becoming weaker. Okay, so we had a doji, which is an indecision candle. Can't just jump in and starts selling because a doji candle formed on the weekly time frame. Okay, like I said, we need to wait for more confirmation, wait for the next candle to close bearish before we sell. Okay, so last week we closed as a doji, and on daily, what do we have on a daily time frame? You can see on a daily time frame, we have this is an engulfing pattern. Okay, after the formation of the engulfing pattern, equal high was created, which is an area of liquidity. It is an area of liquidity. There's a high probability they will come for these highs. Okay, it could be this week, it could be in the future. They would come for this high to clear all the stop losses. A lot of retail traders would have executed sell, and their stop losses will be at this previous highs, and so they are likely going to come for the stop losses. When, I don't know. Okay, so let's go down to, so based on the weekly and daily time frame, gold is bearish at the moment. Gold is bearish at the moment. If you want to buy gold, I would suggest you wait for price to pull back to a discount area. So if we apply our Fibonacci tool, we're going to take it from this swing low. This is the most recent swing low, and this will be the most recent swing high. Before you go bullish on gold, I would advise you wait for price to pull back to a discount area, which will be below Fibonacci level 50. Wait for price to pull back to this area before you go bullish on gold. That's my take on gold. Okay, that's my take on gold. Wait for price to pull back to a discount area before you buy gold. I wouldn't be trading gold this week unless price pulls back to a discount area. Then I could consider buying gold. But if it doesn't pull back to discount area, not trade for, I wouldn't be trading gold. I hope that is clear. Okay, so which other pair should we look at before we end tonight's stream? Let's look at GBPJPY. If there's any pair you would want me to analyze, please just drop it in the comment section. During the week, I would drop my take on my expectation on that pair. If there's any pair you want me to analyze, the pair that is not analyzed during this session and you want me to analyze it, just drop it in the comment section. Okay, I could come on live during the week so that we'll look at the charts together. Okay, so that's it for gold. So let's look at GBPJPY before we end tonight's session. So what's my take on GBPJPY? Let's start with the monthly time frame. Okay, so several weeks ago, I told you guys after the formation of this engulfing pattern, if you go down to the weekly, I identified the fair value gap that was created on the weekly time frame, and I told you guys GJ is likely going to fill this fair value gap before going bearish. So this gap hasn't been filled entirely. Okay, price just tested that gap, and an Angerman candle formed, which indicates change in trend from bullish to bearish, and most retail traders would have executed sell, and their stop losses will be residing at this previous high. So there's a high probability for price to fill this gap because liquidity residing at this high needs to be cleared. So they would also use the opportunity to just fill this gap. Okay, so my bias for GJ this week is bearish. Okay, it's bearish, but I would be going bearish on GJ after this gap gets filled. If this gap does not get filled, I wouldn't sell GJ. If this gap doesn't get filled, I wouldn't be selling GJ. But my bias for GJ this week is bearish. It is bearish. Now, if a candle closes above this fair value gap, probably a 4-hour, a daily candlestick closes above this fair value gap, GJ could just continue with its bullish move. It might just keep going up. The price might just keep shooting up on GJ. If a 4-hour candle closes above this fair value gap or daily candle closes above this fair value gap, then we should expect more bullish move on GJ. I hope that is clear. So if price fills this gap and the bearish reversal pattern forms inside this gap or after this gap gets filled, I would go bearish on GJ. But if price breaks this fair value gap, that is if a bullish candle closes above this fair value gap, then no trade on GBPJPY. I can't buy GBPJPY at this price or above this price above this fair value gap. The risk could be too high. This would have been the best entry for GJ. Buying GJ this would have been the best entry to buy GJ. You can see this would have been the best entry for GJ. So why should I buy GJ at the current market price or above that fair value gap if I didn't buy from this level? So as far as I'm concerned, GJ is overbought. So prices, I want to say price pulled back to a discount area before going bullish on GJ. So that's my take on GJ. If you have any question, please drop it in the comment section. It will surely be attended to. And if there's any topic you want me to teach you that you're having difficulty in understanding, just drop it in the comment section. Okay, so that it will be treated in my next video. Any strategy you want to learn, any strategy you are having difficulty understanding, just drop it in the comment section. If there's anything I shared in this video that you don't understand, drop your questions in the comment section so that I know questions that need to be attended to in the next stream. I really appreciate you for always showing up, for always attending the classes, for always watching every video I drop on this channel. I really appreciate it. It is my greatest desire that you excel, that you make progress in your trading career, and that is what makes me do the things that I do. That's the reason I show up here, to give the best. Okay, I believe you can become consistently profitable in trading. I believe you can. So I want to encourage you not to give up. You are a winner, and winners don't give up. Keep learning, keep learning, keep learning, keep learning. Always remind yourself that you are a student. You are always a student. The Forex market is a dynamic market, and so it demands that you keep learning. Learning is continuous. Don't stop learning. Okay, don't stop learning. So if you have any question, you can also drop it on the WhatsApp group. If you're not on the WhatsApp group, check the description link for the WhatsApp on details. You also have my contacts there. You can also send me a message so that I can add you to the WhatsApp group. There's a lot that is happening on the WhatsApp group, and you don't want to miss such opportunities or miss those informations the information that is being dropped on the WhatsApp group. Okay, so please, like I said, this week is election week, the United States. So ensure that you trade less, ensure that you are conservative for every trade you execute, ensure that you apply stop loss. Don't be in a rush. Okay? Don't be in a rush. Take it easy on yourself. The money, you would make it. Okay? You will make the money in trading, but you have to be patient. If If you rush, you would crash. I've been there. Okay, I've been there. Don't want you to make the same silly mistakes I made when I started this journey. One of the mistakes is being impatient, wanting to make quick bucks in a short time without the right knowledge. Without the right knowledge. So take it easy. Easy, easy, easy pace. Okay? Once more, I want to thank you for always showing up, for always checking this channel. I really appreciate it. Also, remember to share the links with your loved ones, friends, families, colleagues, anyone who's interested in earning decent income from trading. Thanks, and do have a profitable trading week.